The crypto asset market is volatile and risky, but also potentially lucrative if you have the proper strategies in place. That's what this section is all about. By the end of this section, you'll be able to develop a strategic trading process, overcome biases, explain why HODL, holding on for dear life, is just not a strategy. You'll also be able to identify trends using price and time, summarize why the trend is your friend, and how to draw a trend line. There is a saying in trading that goes, if man was always right, he'd own the world in a month. But if he never learned from his mistakes, he'd never own anything. I'm going to talk about some common mistakes that traders make that you need to identify if you're making them in order to improve on them. So most common mistakes, the first are position size too big. And in the crypto markets, this is essential because in 2017, Bitcoin rallied 1,400%. However, during that rally, we saw 7 pullbacks of 20% or greater. In fact, in the last few months, Bitcoin dropped 60%. If you have a position size too large, it makes it very difficult for you to stomach that volatility. Next, no edge. And what I mean is that a lot of new traders just go in the markets, they see things going up, and they just buy them. They don't really think about where to buy them, or how to buy them, or where to exit. So this is a common mistake that a lot of traders make, and we'll talk more about exit strategies in another lesson. Another common mistake is over-trading. Now the problem is, you may have gotten shaken out by a trade, and now you want to get right back in and make the same mistake again. So you don't want to overtrade because the commission costs are going to reduce your long-term returns. Another mistake, trading the junk. And I'll show a few charts in a second, but by junk, what I mean is an asset that moves up exponentially over a short period of time, and you might be holding on to something that really just has speculative value. We've seen in the crypto markets in the last year, there's just been a wall of money moving into an asset class that has a very limited supply and a limited amount of assets to invest in. So we've seen these exponential moves. And lastly, too much leverage. Now, if you're trading on the BitMEX exchange, you can get 100 times leverage on Bitcoin trades, or if you're buying crypto with a credit card, you're leveraging yourself. So let's go into a few charts so I can demonstrate what I mean by this. So this is a chart of a crypto asset called Verge. And this is a price chart of its relationship against Ethereum. Each of these candles designates 1 day in trading. And this is on the Binance exchange. Now you'll notice that in Verge, in mid-December, something happened or some catalyst appeared. And the price of Verge went from 2,500 sats all the way up to almost 50,000 sats. So in a short period of time, and this is just a few weeks, you had a 20 times return on your money. Now a lot of traders might have gotten into this chart after it went up 3 or 4x and bought around here. Now the problem is, if you have no exit strategy, and this is purely speculative, where do you sell? So when you start trading assets like this that are extremely volatile and they start moving down, there's a tendency to kind of hold on to them for too long. And we'll talk more about exit strategies in the future, but what I want you to notice is that when you see something that's moving up as rapidly as Verge, it's not the time to buy, it's really the time to sell. Another example is Sia Coin. And this is a chart of Sia Coin versus the dollar on the Bittrex exchange. Again, each of these candles designates 1 day's worth of time. And Sia Coin was priced at about 2.5 cents or 3 cents here in mid-December, and it went up to 12 cents. This is a 4x return very rapidly. But since that move, there was not one up day for about a month in Sia Coin. So it's important to keep in mind, if you're buying any of these extremely speculative assets, where are you going to get out of them? Because like we've seen in previous lessons, there's no utility value in these coins. They're just purely speculative assets.